But let's get a move on and understand what the scenario is when it comes to malls and retail. Are we actually seeing footfalls picking up? Are people venturing out? What kind of demand trends are we witnessing? And which are the key segments that are leading this recovery? Pushpa Bector, Executive Director, DLF Retail, Luxury and Shopping Malls, now joins in on the show to give us a better insight. Thank you so much for taking time out. So what's it been like in the last few months? Because there has definitely been an opening up of the economy. People have been venturing out, restaurants, even theaters to a certain extent. What's the scenario like when it comes to retail and how things looked as things have opened up?
Good morning. Thank you for having me on your show. Well, I can tell you this, that retail is really on a resurgence back. In fact, the quarter three has seen, sales coming right back. If I tell you about the categories, I would say that luxury, international luxury brands have led the charge. They have done the best. They have almost, in fact, overtaken pre-COVID sales. When it comes to international premium brands like Zara, H&M, etc., they have almost reached around 80%, 85% of pre-COVID sales. I see a big surge even in the athletic leisure category. They have also surpassed their pre-COVID sales numbers, as is beauty. So these are the four that are really leading. On an average, if I tell you, we have seen that luxury has gone around 85 to 90% of pre-COVID numbers on an average. And in the premium segment, we have seen quarter three taking us in few properties around 80%, in few properties around 70%. So I would say it's a range between 70 and 80. And I think it's been a good quarter. And clearly the consumers are back and they would like to do more planned shopping. And we do think that this is here to stay.
Wow, that's pretty interesting. The fact that luxury is back to nearly 85% of those pre-COVID levels. You'd be best positioned then, Pushpa, to tell us what the trends in the future could look like. You were talking about athleisure as a segment that's doing quite well, and even some of these, streetwear brands, high-end streetwear like Zara, etc. So what kind of new retail trends do you see emerging for the year ahead? What kind of a shopping experience do you think people want? Is safety going to be a huge priority? Is that going to be the way forward?
Well, that's an interesting question. The trend, as I see, is sustainability is something that people are really seeking. I see that local sourcing brands are also something that people seek. Trust in brands is the key. I think, which are the brands that did well are those brands which consumers trusted for their pricing, for their quality, for their ethics. So the ethics that brands bring to the table will matter a lot in future. The second thing is, of course, the other trend that I see going forward post-vaccine is F&B will see a huge V curve. Today, I talked about things which were positive in the first segment. Let me tell you the ones which have been struggling and are looking at doing better in 2021. F&B, as you know, because of the social distancing norms and MHA guidelines, have been struggling. So have, the Indian wear, because Indian wear, be it designer or be it, Pret, have really been led by occasions. Now, occasions have been curtailed. So till the MHA guidelines become normal and we do see events happening or we do see people coming in larger congregations and parties happening, we think that these two categories will still be sort of at a 50-60% level. And but they will also experience the steepest V curve in our opinion. So come October, when we hope that post-vaccine and the herd immunity in place, we do believe that these two categories will resurge very strongly.
Sure. In terms of, you mentioned, of course, some of the categories, but in terms of also the pipeline for DLF, new mall launches, for example, the land bank that you have, are you looking at further developments or openings, particularly maybe even in tier 2 towns, or is that something that perhaps will have to wait a while?
Well, I'm happy to share with you that DLF has never stopped in terms of its expansion, even during COVID times. We, as you know, relaunched our Saket Mall, DLF Avenue. We rebranded it and relaunched it. And today, on Makar Sankranti, we are opening Commons, which is the DLF food precinct at Saket. We're calling it the DLF Avenue Commons. It'll have 25 restaurants, and today around 12 of them are opening. So I can tell you that we are on an expansion. Our sort of in terms of our future sort of sustainability in terms of malls, we are optimistic and bullish. We also do believe that mixed-use developments are here to stay. So Cyber Park is our large office complex. You will see very soon a very beautiful Cyber Park Retail, which we'll call the Hub, opening soon. And same is the case in Chennai. We are opening another hub in Chennai. So all these 3 mini projects are going to be open in the next quarter. And post that, we will reevaluate the future. But we are really open to seeing good opportunities coming our way. And we will pan out our expansion plan post that.
Okay, so that's on the expansion. How have online retail players as well been impacted? The kind of sales and footfalls we've seen in the malls. Do you see a visible difference? Are you forced to now look at a new way to bring in, footfalls or offer services to the general, to the general buyer?
Well, the way I look at it is that, consumers who would like to have a touch and feel experience would prefer shopping in malls. Few categories we thought would go in completely online. Actually, we have seen that they are coming in offline too. When it comes to supermarkets and hypermarkets, that's a category that could see a shift because COVID has seen that most of us are able to purchase our dailies online and with a lot of convenience. Our larger belief is that experiential retailing, which means our, be it segments of beauty or athletic leisure or anything which requires a little bit more of a touch and feel and a communication with the consumer service, that will remain in the offline space. Broadly, yes, online has seen a huge shift in the during COVID, and they did take over 25% of the pie. But we think that once vaccine is in place and people would like to come back, we will see that there will be more of a balancing act as far as offline and online goes. Our strong belief is that people, we all live in communities, and the one thing that we have all missed is really meeting other people. And Asia, and especially India, shops in groups, shops with friends, shops with relatives. So that is here to stay, and hence offline retail will research back, not maybe to their previous levels, but there'll be a shift of not more than 2 to 3% towards online. From a category point of view, as I told you, it is the hypermarkets which could see a shift to on the online space. Other than that, commodity retail may see a shift, but experiential retail is here to stay in the offline space. You will be happy to know that, even during COVID, whatever vacancies we had and whatever, we are filling it up pretty quickly. We have a wait list in our properties. So the way I look at it is good properties which are strong will emerge stronger post-COVID, because it was also an opportunity to see who were the weaker players. And so whatever was the churn that we could do, we did it very amicably, but at the same time, we have an opportunity to strengthen our properties. We've been, in fact, very soon we'll be sharing with everyone that we've almost signed over 50 to 60 new brands in these 3 quarters.
Oh my God, I honestly find that so hard to believe. So you have a wait list, you're talking about new brands being signed. That really bodes well for you. So can you break it down in terms of numbers? Rental negotiations, what's it been like since you guys opened? I'm not too sure when it exactly was, but over the past few months, what has it been like in terms of the rental income, the commercial space by way of numbers?
Well, at a broad level, I can share this with you that we have not reduced our rental numbers. It came down by around 5% to 7% initially, but seeing Q3 and the resurgence back, our rental numbers remain the same because it's to do with the retailer confidence coming back. Number one. Number two, also that the category shifts that we are seeing larger players coming in. We are seeing people who are serious about retail in the long haul also redoing their business. In COVID, what's really happened is people have re-looked at their business model and seen what's the efficiency levels in each of their business categories. So we've seen many of the brands, which are large brands, have strengthened themselves. We've also seen a resurgence of the smaller sustainable brands, the made in India local brands. They are slowly coming back in. Now that growth may be a little slow, but I do believe that the international brands growth need not be slow, and it can actually be pretty aggressive and clear with their future plans for the country. And so I think from a broadly the rental levels, we haven't seen too much of a dip. You can say around 5% on a case-to-case basis, but nothing more than that. I think another thing that I'd like to add is that, Delhi NCR is the highest consumption market. And we and DLF have got the best properties in Delhi NCR. So we believe that, by strengthening our properties during a crisis like this, one can actually emerge stronger than before. And that really will be our strategy.
So you're saying that there's not really been any rental waivers as such, and so that the numbers have remained pretty much stagnant, and that is likely to continue as well into the coming quarters?
No, what we did for the crisis and in order to ensure business continuity is we actually went ahead and gave a package for the whole year. We treated the whole year like a gap year and supported the businesses to come right back. Those tenants who are there with us in our properties. When I mean rentals, I mean the new leases that we are signing, we haven't really brought down the rentals beyond a 5% here or there. That's the point I was making. But yes, we did support all our retailers. And we also did another thing that we helped them get back on track. We help them through their safety measures. We help them through where there are some people really had a problem with even employees. We help them with all spheres to get them back onto business. And that really, ensured that our partnership, our relationship has actually strengthened during this crisis as it should. And we are looking at the future with a cautious, optimistic approach. I don't think there's going to be a miraculous resurgence back immediately in the next 2 months. The vaccine will take around 4-5 months to get into action. The herd immunization, etc., will take another 6 months. So if we look at a macro scenario, the sentiment would be cautious optimism from DLF's point of view. But we do believe that these numbers are going to go up steadily all the way. And from October on, I expect a good V curve across our properties.
More than a silver lining, indeed. And, there are signs of recovery that are very evident, as you just spelled out. Thanks so much for giving us a clearer picture as to what the retail trends are and which categories really are leading that growth. So that's the word coming in from DLF Retail, luxury and shopping malls. Let's take a quick break with news that we're at 14,536 on the Nifty.